Hey, my name's James Nicholson. I hope you guys are well. In this video, I want to talk about why I personally feel the Bank of England is wrong to keep raising interest rates. So I'm going to go why that makes a big impact on personal incomes, why I think it could even feed a little bit of inflation as well, and lots more besides that. So while you're here, if you haven't done already, make sure you subscribe to the channel and hit the bell notification. Smash the like button, guys. We're on target for 100,000 views this month, which is crazy. The channel's only a little over a year old now. And so to think 100,000 people are watching in a month is absolutely insane. And yeah, do subscribe and hit the bell while you're here. So what is going on? Well, obviously we've had a very strange few years. In my 20 plus years as a property investor since 1999, 24 years now, I've never seen anything like this. I mean, when the 2008 property crash happened, it didn't feel as dramatic as what we're going through at the moment. So we've had a pandemic. Obviously, at that point, we turned on the money printers. We were doing that anyway, but we really cranked them up and we printed so much money for bounce back loans, for furlough schemes, all these other things that we needed to do. And now we're looking to have to pay that back. Now, coupled with that, we've got high inflation, and the inflation rate in the UK was over 10% for a period of time. It's down, but it's not coming down fast enough. So what would normally happen is the Bank of England would raise the interest rates. They've done that 14 times now, and that would help crush inflation. Now, interest rates have gone up 14 times and house prices are getting impacted by that. But what's happening is landlords are getting hit hard because they've got interest-only mortgages. So some landlords have got interest-only mortgages that have maybe tripled. That means that they could be losing money each and every month. And what's happening is landlords are leaving the market in droves because they're getting hit by interest rates, Section 24, Section 21, EPCs. There's a hell of a lot going on for landlords, especially if you don't have your business set up as a landlord and an investor in a limited company. It's very expensive at the moment to run this type of business. So landlords are leaving. What then happens is rent is going up at record rates at the moment. Rents are absolutely flying up. Everywhere that I rent, I'm seeing it. So in Doncaster, when I started my project with Georgia, my daughter, this was a year ago, like not a long time ago, we were expecting to get 475 rent, right? 475 rent. Now we had the first tenant came in and we got them on £500 rent. They stayed for 6 months. They were a contractor, moved on somewhere else. Then the new tenancy, the market rate was then 625. So we marketed that knowing that we need to keep the rent a bit higher because at some point our interest rate's going to go up. We've got a deal fixed for now, but at some point we're going to get a more expensive lending from the bank. And so that's what we did. And so we'll always do that. We've done videos where we talk about raising rents fairly, but if we have a void, then we will go to market rate. And that's important that you do that as a landlord. And that's a big jump there. That's a big jump. That's like, what is that? I'm terrible at maths, like 20 odd percent. We've put the rent up and that's what the market's done in that area. In Dorking, we've got properties that a year or so ago would have gone for 800 that are going for £1,200. In Hastings, I've got a flat that was going for 450 3 years ago. That market rate is now 675. Now, this is happening because landlords are getting squeezed out of the market. Interest rate rises are one of those things. Now, obviously, when your eggs go up, your fuel goes up, and all of these things aren't great, but they're a smaller proportion of your wage take home each and every month. Mortgage payments and rent are arguably, well, not arguably, they are the biggest cost that people have each and every month. Now, with raising the rates and pushing landlords out of the market, what's happening is people's costs are going up significantly on those two products. Now, other inflation is settling down. Core inflation is settling down. But these are going to have an impact for a while. You're going to have people that have got higher mortgages now that have just fixed for a 5-year. So inflation will be gone, hopefully, within that 5-year period. We'll stop talking about it again. And what will happen is that person that's fixed on that 5-year higher rate will have locked in that higher price for a prolonged period of time. Now, we are seeing that the market is turning. And I just feel that a wait and see approach could be a better approach right now. We've had interest rate rises 14 times. They take so long to feed into the market because if they put the interest rate up tomorrow, it doesn't necessarily mean your mortgage is going to suddenly get really expensive. It takes time. You need to have what your deal needs to expire, right? You need a new deal in order for that to happen. And so it's going to take a while, all the interest rate rises that we've already had, for them to come through and impact spending, right? Because your goal by raising the interest rate is to take money out of people's pockets to stop them spending, right? That's the goal. But that's going to happen. That is already happening. We are starting to spend less. Things are going a little bit more doom and gloom. Jobs have dropped. Vacancies have dropped. And so there is that cautious optimism that we are on the way to beating the inflation. Now, they want to beat it faster. But if you put the rates up 2 more times, which is what we're expecting, then people are going to have their own inflation. Forget the core inflation. Just forget that for a minute. What is happening is people's own personal costs are going to be locked in for years to come. Now, rents going up, some of you made comments on this, is unlikely that they'll come back down. Very unlikely that they'll come back down. If the rent in an area gets to £1,000, it's likely to stick at that level. Now, it might not go up for a few years, but it's likely that it will stick at that level because there isn't suddenly going to be an influx of new landlords creating more supply. That means that people have to drop their prices. We're not suddenly going to lose a load of people in this country. There is a lack of housing, so rents are going to stay high. And so by keep raising the interest rates, by keep pushing this up and up and up, it's a real problem long term for people. I just feel that the right thing to do for the Bank of England is pause. Something that's happening external that's going to bring our inflation down is China is potentially now in deflation, prices dropping. We buy from China, and so that means that when we buy from them, the cost is going to drop. We're going to import a lower price. That's going to have an impact on our inflation costs as well. And so I just feel that the right thing to do will be pause for the rest of this year. I don't know that that's going to happen. I don't think that's what's going to happen. But I think that would be the right thing to do because I think they've done enough. They even say themselves in their meetings that they just don't know how long it takes for these interest rate hikes that they've already had to feed through into the market and impact people. They don't know. So stop raising the rates and pause and see what happens. That's what I think. What do you think in the comments below? Some of you will just say, hey, I'm a landlord, so I don't want prices to go up on my interest rates. Of course I don't, right? But I also say a lot on this channel, I don't want rents to massively rise again because that causes problems for tenants. If my tenants can't afford it and I have to put the rent up because of my interest rate, that means I'm more likely to not get paid by the tenant, and that's not good either. Let me know your thoughts and comments on this video. Do comment below. Do subscribe to the channel. Do hit the bell. And we're trying to hit 100,000 views. You're watching this at pretty much the end of August, I'm sure. So why don't you go and watch one more video and help me get those views? Go and check out this video right here.